Hey everyone, welcome back to Corporate Decoder, the place where we, turn financial documents into something other than a reason to fall asleep. Today we're diving into the Copper Property CTL Pass-Through Trust's latest quarterly report. And let me tell you, it's a trust all right. Trust me, some of this is drier than the Sahara. We'll dig into what this all means for those who've invested so you can see if you need to start sweating. Copper Property is a trust created back in 2021 during the old copper company's bankruptcy reorganization. Basically, they own a bunch of retail properties that used to be JC Penney stores, plus some warehouses that they sold off. The idea is to lease these properties and eventually sell them for a profit, passing the money to the investors known as certificate holders. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for you to join our discussions. Let's hit the numbers. First up, the balance sheet, which is like a snapshot of what the company owns and owes. As of the end of March 2025, their total assets were about $1.1 billion. Looking back at December 2024, it was higher, around $1.14 billion. So assets went down a bit. Now let's get into some specifics. The amount of money they expect to receive, or accounts receivable, is around $34.3 million. That's slightly down from the $35.3 million at the end of 2024. It's a small change, but good to keep an eye on. On the other side, their total liabilities, what they owe, are about $121 million compared to $20 million at the end of 2024. It's slightly reduced. So overall, the trust owns a lot more than it owes, but it is down from end of last year. Here's a number that might raise an eyebrow. Accumulated distributions in excess of earnings. Basically, they've paid out more to investors than they've actually earned over time. It's almost $1 billion on the negative, meaning they keep giving more money to investors than they are making, and that's not ideal. Scrivener's Exilis income scroll. Let's check out the income statement, which shows how much money the trust made and spent over the last 3 months. Lease income, the money they get from renting out those JC Penney locations, came in at $24.6 million. Compared to $25.5 million last year, it's slightly down. Operating expenses, those costs to run the business, were about $3.1 million. General and administrative expenses, the cost of running the office and paying staff, were around $1.3 million. After all the expenses, their net income or profit was $16 million. Looking back to last year, it was closer to $17.7 million. So things are generally down. Digging deeper, the trust reported earnings per certificate, which is like earnings per share for a stock of 21 cents last year. It was 24 cents. The cash flow statement, which is crucial, tells us about the actual cash coming in and out. Cash from operations, the core business activities, was $19.8 million. In the same period last year, it was higher, over $22 million. A clear sign that the trust is slowing down in their actual cash generation. Investing activities, on the other hand, which would include property sales, generated basically zero. Last year, they generated $16 million. Now that difference is substantial. It's like their engine is sputtering. Finally, financing activities, mainly how much money they are paying certificate holders, cost them $37.7 million last year. With $19 million cash from operations and distributing $37, the trust is digging in its cash and equivalent reserves to pay distributions. Now, this is the amortization table, which is a bit of an accounting thing. It's estimating future expenses and is important if you want to check if a company has unrealistic accounting estimates. The amortizations are large for this company and will weigh heavy in the upcoming years. The numbers that the company provided in the filing look reasonable. However, the trust is still giving future investors a big risk on amortization. Let's talk lease income. Fixed lease income came in around $23.9 million. Variable lease income, which depends on things like sales, was a smaller slice of the pie at $969,000. They get a bit more to around $1 million of ground lease reimbursement income, which is again related to property income. Moving on, it is important to note some of the risks and other things that Copper Property is legally obligated to. The trust has risks of landlord options, meaning they could be forced to terminate some leases early. Also, the trust is exposed as a large percentage of income comes only from Penny Intermediate Holdings LLC, which exposes the trust to a concentration risk from one single entity. Talking about risks, the report mentions that all of the properties are leased to Penny Intermediate Holdings LLC, meaning that Copper Property is totally dependent on one tenant. If JCPenney hits another rough patch, Copper Property is in trouble, which translates in trouble for investors. And as an investor, I would make sure that Copper Property is making sure that everything is okay with JCPenney. As of this moment, it's good to know that there are no legal proceedings that could really hurt their business. Finally, the report covers fair value measurements, which is about how the company calculates what everything is worth. Bottom line, the trust didn't hold any assets or liabilities at fair value. Not ideal, because that makes me wonder exactly how they value their assets. Now, taking a step back, Copper Property is facing some serious challenges. Their revenue is slightly down, profits are shrinking, and they are paying out more cash than they're bringing in. They are overly dependent on JCPenney, so if the retailer goes down, everything follows. On the positive side, real estate can be a relatively stable asset, and Copper Property does have significant value tied up in those properties. However, with the trust scheduled to potentially terminate late next year, 2025, there are not too many positives to see with these filings. Alright, that's our breakdown of Copper Property's latest report. What do you think about these numbers? Are you buying, selling, or holding? Drop your thoughts in the comments. If you found this analysis valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord channel linked in the description. It really helps us build a community. Thanks for watching. See you next time.